Is Michael Aronstein, the president of Marketfield Asset Management and also the manager of the Marketfield Fund. He's also the chief investment strategist of Oscar Gruss Son. Thanks so much, Michael, for being with us.
Morning.
Okay, so before we get to whether or not we're going to see this economic recovery derailed or not, what did you make of the trading we saw yesterday? What did that tell you?
I think there's an underlying institutional bid for equities in the United States, and I think people are getting the realization now that there's a big underweight in dollar assets globally among global managers. People have spent years trying to diversify out of the United States, and the U.S. is really performing a lot better than markets around the world, and I think that's beginning to sink in. So people who've been really, really overweight non-U.S. assets are being punished pretty severely this year. And in the U.S. retail sector, a lot of money has been allocated to international equity and bond funds, and I think we'll go through a multi-year process of that being repatriated. And that reflects fundamentals in your view? Yeah, absolutely. I think in the emerging markets and in Europe, you've gone through a real boom period, particularly in the emerging markets, where in the 7 years up until last year, starting after the recession in 01 and 02, a lot of emerging market economies and stock markets performed as well as the technology sector did in the United States in the 1990s. So valuations went from ridiculously cheap to, I would say, comparable to developed markets at this point. So would it be too much to say that the party's over there, or you just think that the party has quieted down? I happen to think, I'm suspicious, I think it is over. I think we're going to go through a long period in which money moves back into U.S. corporations, which have gone through this period and emerged in the last 3 years in the best shape they've been in decades, from a fiscal standpoint. And that is why you're not crazy about commodities right now, and commodities-related assets, right? Yeah, I think the whole commodity trade was part of this escaping the dollar phenomenon, where people said anything but dollar assets, and let's get out of the United States because the U.S. consumer is so impaired and the banking system here is in such bad shape. So that was one aspect of it. There are many aspects to people's move to diversify away from the dollar. So I'm not interested in most of them at this point. But how could, getting back to the party over in these emerging economies, how could that not undermine U.S. economic recovery? Well, it will to some extent, but when you look at the actual trade relationships with U.S. exporters and their foreign counterparts, we're not that dependent on exports to the developing markets. And in fact, the flows of capital from the United States to the emerging markets have been a real fundamental contributor to their vigor over this cycle. I mean, that's a fundamental, the investment flows. It's not simply market related. It actually feeds through into the economic infrastructure. So would you ignore the volatility now, Michael? Then are you saying that, look, I wish I could. Then what do you do? Because do you buy in now, given that we seem to have bounced off the February low? Do you buy in now and say, look, I'm betting? We've put a little money to work over the past week, and no, it's in U.S. stocks. Yes. Okay. And it's difficult. We've been short emerging markets in the fund as part of the outlook this year, and it's helped us. It's kept the fund's volatility somewhat restrained, but it's not easy operating in markets like this, and particularly when you saw what happened 2 weeks ago with the complete evaporation of liquidity in the stock exchange. You're talking about the May 6th. Yeah, the May 6th crash. That's a little bit sobering. But did it change the game for you or no? No, it's something, it's part of the market structure that's really been imposed by the regulators, and it's something over time that I think is going to have to change. But it just makes, I don't mind difficult markets because that's what we as a firm are structured for. But emotionally, it's a little trying. You don't want to be scared out of your wits either. No, I think I've done it long enough where my fear response is somewhat muted. Oh, good. So you're used to it. All right, Michael, thanks so much. Michael Aronstein of Marketfield Asset Management.